Okay. Well, good morning, everyone. Thanks for being here. I am Cammie Adams with the Columbus Chamber of Commerce and also the Think Local. I'm on the committee for Think Local. And Think Local is hosting this event today. And we have asked Maggie Wright to kind of walk us through just some things to prepare us for getting ready for the end of the year. So Maggie is a licensed certified public accountant and having gathered many years of accounting and income tax return preparation experience, she started her own firm with a vision to assist small business owners and startups. She lives in Columbus with her husband, Rick, and daughter, Leela. She assisting small businesses and watching them grow is a passion she nurtures. She and her husband are Army veterans who have served in Iraq and Germany as well as the USA. She attained a bachelor's degree in both accounting and economics. Her work primarily covers the areas of bookkeeping, tax return preparations, Indiana, as well as federal payroll tax forms and other tax-oriented subjects. She is also a certified QuickBooks Online Pro Advisor and is an expert QuickBooks desktop user. Maggie, I may have some questions for you because I am the opposite of an expert QuickBooks user. So with that, I will turn it over to you, Maggie.
Okay, so yeah, and I'd like to say Ashley is not just my assistant. We need to change her title. She's more like vice president. So she's been there for a few years. We need to change her title. But yeah, I'm just going to go ahead and share my screen. If I'm not talking enough, let me know. I am an extreme introvert. Let me figure out how to do this. Okay, I think it's going to show up on the screen. I don't know where it went.
Yeah, we just have your blue screen.
Oh my gosh. Okay, now what are you seeing?
There you go.
Yay. This is one of Ashley's roles as Chief Technology Officer. Oh, hold on. We did practice this, believe it or not, this morning. Okay, so just ask questions as we go because I'm not really sure what everyone has questions about. And there's a lot of different things, you know, for taxes and bookkeeping that I don't know, everyone, there's not very many people here, so just ask questions as we go. We'll be fine. So we'll go over year-end bookkeeping, estimated taxes, 1099 prep, and then budgeting and forecasting for next year. It's kind of like, I mean, there's a lot more topics we could talk about, but like I said, I just pulled a few, and if you have more questions, just Ashley, can you monitor the chat? Because I don't know how to see it while I'm looking at this, the slides. Okay.
I can do.
Okay. So I guess to start off, like if you haven't been doing your bookkeeping all year and you're waiting till year end to just like hand over your bank statements or your QuickBooks file, don't do that. Go in and make sure that you've actually like balanced your checkbook and updated all your expenses that you pay personally for the business. Even if you don't like enter those into any kind of like official ledger or anything, just make sure your tax preparer knows that, you know, I drove this many miles on my car for business this year, because that's like almost 60 cents a mile for a deduction. That's a really big deduction for most business owners, because they go to, like, even if you just work out of an office, you go to networking events and different things like that. Home office deduction, if you use a part of your home for your business, you can deduct that. There's different ways of doing that. Usually people just take like the standard $5 per square foot deduction because it's easier than adding up all your utility bills and splitting everything out. I always say like your home internet, take a portion of that if you work from home, your phone, anything else that you can possibly think of. Like if you started a new business, you'll probably have a bunch of equipment that you contributed to the business. Even if it's an office-based business, like you'll have your computer and printer and I don't know, tablets and all this stuff. So just try to think back and make a big list of that along with the value of the equipment when you started using it for business. Your tax preparer will ask for that. Yeah, just try to think of anything else that isn't already coming out of your business bank account. And if you don't have a separate account for your business, go do that for next year. Is if you don't have a separate account, you're going to lose track of all your expenses, and then you're going to end up paying more tax than you owe. If you do sell items and you have inventory, make sure you do an inventory count at year end and just give your tax preparer again that number at year end so they can update your cost of goods sold. If you are considering making any large purchases, so if you think you're going to make, if you'd rather save the money now versus next year, and you have something big that you're going to purchase, like a car or computers or some other like equipment. I know Mandy's office has a lot of equipment. You could do it in December. And if you purchase it and start using it in December, then you can go ahead and write it off on your tax return for this year. You know, or if you have any payables that are open, go ahead and get those paid right before year end. Even if you write the check at December 31st and drop it in the mail, it still counts. So do that. And then if you are structured as an S corporation, if your business is taxed as an S corp, which is just, send me an email if you want more information on that, because that's like a whole big thing in itself. But if you are an S corp, don't forget to pay yourself the salary that is mandated by the IRS, because if you don't pay yourself that salary, like W-2 wages, and this only applies to S corps, the IRS can go back and look at all the distributions you took from your business and reclassify those as wages. And then you're going to owe back taxes and penalties and stuff like that, which is no good. Do we have any questions on like year-end bookkeeping and other expenses? Like if you have a question of something that might be an expense or not be an expense, you can ask me. Oh. Okay, so estimated tax payments. So the United States tax system is what they call pay-as-you-go tax system. So basically that means that the IRS and Indiana, they want you to pay your taxes as you incur the liability. So like if you made so many dollars in first quarter, after first quarter, they want you to go ahead and pay the taxes that would be due on that $10,000 or whatever that you made in first quarter. If you don't make those estimated tax payments and you wait all the way till the end of the year and even wait until you file your tax return to make those payments, you're going to get hit with penalties and interest, which nobody wants. So if you didn't know about estimated taxes, you can go ahead and make a fourth quarter payment and try to catch up, or at least pay as much as you can before the tax return is due. And a lot of business owners don't even realize that they're going to be hit with self-employment tax. So it'd be a good idea anyway, just to go to your tax preparer, even if you don't plan on making an estimated payment, and just have them kind of try to estimate what they think you will owe so you can prepare yourself for the hit in the springtime whenever you file your return. But if you can pay it, that's even better. If you itemize, then you can pay the state's taxes before the end of the year, and that'll help you with your deductions on your personal return. Sales tax, this is something that people forget to do because a lot of businesses are only required to file and pay their sales tax once a year. Now, this doesn't apply if you don't actually like sell retail items or if you don't have a sales tax account. But so if you forget, it's kind of a minor issue really, but it is more of an annoyance than anything. Like if you forget to file your sales tax form and pay and remit the tax, the IRS will like come up with this crazy estimate of how much they think you owe. I don't know. It's like they send out the same crazy estimate to everyone. And I think they just do it for shock value because they'll send you this estimate. They'll say you owe $5,000 in sales tax, and you'll get the notice like in March or April because the tax return was due in January for the year. And then if you do end up forgetting to pay your sales tax, you just go in there and file it and pay the tax, and it all goes away. But don't forget to do that. It's due by the end of January if you're a yearly filer. Another thing you can do before year end, and even on, I was looking up yesterday, even like you have up until I think April 15th to make most retirement contributions and HSA contributions, which is a health savings account. So you can make those contributions at the end of the year or at least before April 15th. And then that still counts on your tax return as a deduction. So that'll lower your taxes. And I also read yesterday that on some retirement plans, even if you don't have one set up by the end of the year, you could still set it up like before April 15th of the next year and make that contribution. So just need to talk to your financial planner and ask them what type would be best for you and how to get it started and set up and going. This is something else that people forget about or just unaware of. So 1099s, if you hire someone to work for you and they're not on your payroll, like as W-2 employee, and if you pay them $600 or more, then most of the time you need to issue them a 1099. And basically this is just you telling the government that you did pay this person this much money. Like the government receives a copy of the form and the person who received the money receives a copy of the form. So the government knows to look for that person to report that income. I always call it's like kind of like a tattletale system. So that's what 1099s are for. But the catch is if you don't, like, it's not that person, the contractor's responsibility to ask you for one. It's your responsibility. And if you don't issue a required 1099, they have some pretty big penalties. It's like $200 or something per 1099 not issued that was supposed to be issued. And those are also due by the end of January. It also goes for rent.
Oh,
Yeah.
I was going to say, even not being a QuickBooks expert, they do have a box in QuickBooks. When you pay that person, you can click 1099 right there when you first pay them so that you don't forget and try to remember who you paid at the end of the year, which I've done.
Yeah, Ashley and I, we clean up everybody's books every month and keep track of all their payments. So at the end of the year, we pull reports and we just sort it by the name of the person paid. And then it's very tedious, but like our clients, generally they don't know because that's why they hire us. But that's my system. It takes a long time. January is the most painful month of tax season because you've got all these payroll reports and forms to file. But yeah, just don't forget to do that because people always, I ask them, hey, do you have any 1099s that need to be issued? And they're like, I don't think so. This person didn't tell me they needed one. I'm like, it's not their response. Of course, they don't want one. They don't want to report their income. But if you decide not to issue the 1099, you're going to get the penalty. So the IRS doesn't care about reasons or feelings. Like they don't care about any of that stuff. Yeah.
So this would apply to like the people who clean my office and do landscaping, right? If it's over $600.
Yeah.
What about like my IT is regularly $500 a month, but then there are projects, we're ordering new computers or there's maintenance or special projects. So the net by the end of the year is over $600 per month, but like even ongoing is 500.
Yeah. Even if it's for hardware, it still counts because it's part of the services.
Okay.
Yeah. But here's the catch. If you pay with a debit or credit card, you don't need to issue the 1099 because the debit and credit card companies, they're already issuing a report.
Mm-hmm. Okay.
There's a lot of little catches.
Bank draft EFT would not catch it?
No, it wouldn't catch it.
Okay.
It'd have to go through like Visa or MasterCard or something like that because they issue a report to the IRS and also to the recipient called a 1099-K. So the IRS doesn't want you to issue a 1099 because it would be a duplicate.
Okay.
I was going to say, also, if the recipient is a corporation, like a C Corp or an S Corp, any kind of corporation, you don't need to issue a 1099. And the way you find out is you ask that person for a W-9. And they should have no problem giving that to you. If they refuse to give you a W-9, just don't do business with them because they're not reporting their income and you don't want to be associated with that. So.
So
So
like
basically, oh, go ahead.
I was gonna say like Duke Energy, they don't get a 1099, right? Because
No.
yeah,
Duke,
I'm just trying to
like
think of
utilities
others.
don't get one.
Yeah.
Insurance companies don't get one.
Okay.
Yeah, there's a lot of rules to it. It's best just to kind of ask your tax preparer to figure it out for you because there's a lot. Yeah. Attorneys, they do get a 1099. And then last year, or maybe it was 2 years ago, everyone used to get a 1099 miscellaneous, but now the 1099 miscellaneous are primarily used, at least for our clients, for reporting rent paid. And then the 1099 NEC, I think it stands for like non-employee contractors or something.
Non-employee compensation.
Yes, that one. So now all those people like the landscapers, they go on a 1099 NEC. And then there's all kinds of other 1099s that sometimes companies have to issue. Like sometimes if it's an S Corp or a C Corp, they'll have interest that they paid out and that will need to be issued by the company. C Corps have dividends that they paid. So the C Corp needs to issue 1099 DIVs. So anyway, yeah, just be on the lookout. Like if you could hand over your ledger or whatever you have to your preparer and ask them to let you know if it looks like they need to issue any. Yeah. Ashley, do you have anything else to add?
What I was going to say is like basically the gist of the 1099s is it's a total of payments that are 600 or more during the year, whether they are cash or paid by check.
Or ACH,
That-
right? Or EFT.
Yes. Because ACH and EFT are considered kind of like checks.
And this link here, we can send these slides out afterwards. I can send them to Cami or Bob, maybe. This link is the link to the instructions and it's long, so I didn't copy and paste all the instructions, but like when I'm looking through these long instructions, I do a Control F and I look for the word I'm looking for. Just, if you want to look through here to figure out if you owe someone a 1099 or not, that's what I do. Kind of use that as a table of contents, the control find function. Yeah, I think that's about it. Okay, and then budgeting and forecasting. A lot of people, I would say like the majority of business owners don't make, like to me, this is crazy because I just do numbers all day for a living. Like they don't make a big spreadsheet and try to figure out what's going to happen next year based on last year. But here's my method. I don't know if anyone would want to try it or not, but like I look at everything I spent last year and I look and see what was a waste of money. And then I write that down and make sure I don't do it again next year. Like, oh, I hired this person to do that. That was dumb. Or I fell for this and I got tricked into doing this. And Ashley's laughing because that happens to me a lot. I fall for things. Pretty naive sometimes, but yeah, so like I'll make a spreadsheet and then I'll have each month, and it doesn't have to be like super detailed, but like have a billings goal. Like, okay, like every month I have a goal of how much I'm going to bill. And usually it's a percentage above that month last year. And then after that month ends, I go in and I just see did I make it? And then even like I break it down during the week. I say, okay, I need to make this much this month. This is how many, how much I need to bill this week to make that monthly goal. So it's pretty tedious, but it's worth it. Like for instance, our sales are up, I think 30% this year. And it's because I'm tracking it and measuring it. And like, if you don't measure it and track it, you don't really know what's going on, because I find that like most self-employed individuals are very optimistic and then maybe don't want to see the actual numbers or see what they spent. But if you force yourself to track it, then you'll see what's really going on, and you can make adjustments. And I don't know, that's about it. I guess it was a short presentation. I'm not much of a speaker. I don't know if anyone have any other random bookkeeping, accounting, or QuickBooks questions.
I have one back 2 slides about the taxes, like filing. So I'm like, oh, I need to do that. So I look and see if I can find where I have to send those, like what forms they're like, where do I find that stuff? Just on the
1099s?
website?
Is it the 1099s?
No, not the 1099s, like quarterly tax.
I can send, I have those links. I can send you the links. You can just pay them online. But
Great.
to estimate the tax due, I mean, a general rule of thumb would be like for self-employed individuals anyway, your profit, send 20% of your profit to federal and like 5% to state.
Okay.
That'll get you in the ballpark. And
Okay.
if you overpaid, you'll get it back as a refund, or you can apply it to next year. If you underpaid, obviously you'll just need to pay it.
Okay, thank you.
Yeah, and so I need to send you those links. Let me write this down. I guess I could send that to Cami too. Can I do that? Okay. Yeah, Indiana updated their payments system, so it's a little confusing, but I actually have it saved as a draft in Google because I have to send it out so often. So I'll just copy and paste it over and send it to Cami.
Perfect. I'll get it to everybody. Is there anything, like, what do you recommend for, like, I know that there are all kinds of reports due at the end of the year and at the beginning of the year. And from year to year, I always kind of like forget what they are until I start, getting the notices. Oh, this is due, this is due. Is there a schedule of like when things are due so that you can kind of pre-plan, and maybe, a smart thing would be to mark my calendar?
There is a schedule, but it's not very helpful. It's in a big publication by the IRS. I could send that to you too. How about that? But yeah, basically like at the end of the year, if you run your own payroll, you need to file all the payroll forms. During the year, you have to do like quarterly payroll forms and deposits. And then at the end of the year, you've got your 1099s, W-2s. Also during the year, another thing people don't realize that even exists is personal property tax return. That's due every year to the county by May 15th, I believe. That's usually right after tax season. We try to do those during tax season as much as we can. And then April 15th, we start on those. It's a really easy form, but it just has to be filed. And then I think it's, if you have less than $40,000 of what they call personal property, so it doesn't count vehicles or anything else that you have registered that you already pay a tax on. It's like computers, furniture, chiropractic tables. If you have less than $40,000 worth of that stuff in your business, then you actually are exempt from tax on that, but they still require that you file the form by May 15th. And if you don't file it, they send you a notice and a $25 penalty. But yeah, we do file those for people, but if somebody has like a really easy one, I usually just tell them that they should just call the county or stop at the county assessor's office, and the ladies in there can just file it for you really quickly for free. But yeah, I'll send those due dates. I think I've got those copied and pasted somewhere too.
I have a couple questions, Maggie.
Mhm.
So first, year-end bonuses for staff and for me, for my doctors as well. What's the best way to do that? Is there a certain amount where you have to run it through payroll and then they have to pay tax? And also,
You have to run everything through payroll if they're on payroll.
okay, there are gifts you can give though, right? Like student loan, a gift that they can apply to their student loans up to $5,200 where it's untaxed, or anything like that where there could be tax savings to them.
I have to look that up. I'm not sure about that one. Yeah, I just don't know. I have to look that up.
Okay. And then what do you foresee with impending tax changes coming? And I know the 20% business pass-through deduction can be affected in the tax rating.
Hold on, I'm making a note. I mean, I foresee taxes going up because, like, just generally speaking, I think taxes are going to go up because the government is spending a lot of money, like across the board. Just plainly, it's all going to go up because we've got all these programs going on. We've got all the money that we had to spend last year to keep the economy from collapsing. So, like those big purchases, maybe save them until next year. If you think your, tax, if you're going to make the same or more next year, save them until next year to take against your income next year. But yeah, just overall, I feel like the tax rates are just going to go up.
Would that affect 2021 taxes, or would it all be pushed to 2022, filing in 2023?
I think in 2022.
Okay.
Yeah. Or even beyond, maybe a couple of years from now. Because it's going to take we're still feeling the impacts of the pandemic. It's taking a year and a half for the supply chain to really get backed up from the pandemic. Economic impacts can take even longer. Because if you think about it, like it takes a long time for tons of people to quit their jobs, and then those people stop spending money, and then businesses stop making money, and then they have to lay off more people, and then we need more government programs, and then the government spending more money, and then taxes go up. Like it's just a really long chain of events.
Maggie, this might probably affect more personal taxes, but how does, a lot of people working from home, does that affect any kind of business bookkeeping things, or is it more on the personal side?
Well, if you're a W-2 employee, you're not allowed to take a home office expense, but you should ask doesn't apply to most people here, but your employees might be asking you to pay for their internet or cell phone or things like that. I mean, just generally speaking, overhead's going to go down because people don't have to pay rent. They're not paying for fuel.
They're not paying utilities on an office that they're not using.
But as far as the people who are like employees and they're working from home, they can't really take a deduction for that. I think it was 2017, the Tax Cuts and Jobs Act was passed, and that got rid of the 2% itemized deductions, which would have included employee, like unreimbursed employee expenses, which would have been working from home and things like that. But that's not allowed anymore. There are such things as statutory employees. And I don't know how you set that up, honestly. I don't do a lot of payroll. But there is such a thing as a statutory employee, and that type of employee, I believe, can take expenses against their income, against their W-2 income. There's actually a lady I refer people to if they are statutory employees, because she knows actually a lot more about taxes than I do. She's what's called an enrolled agent. So like a CPA, we have a very broad like spectrum of like business and economics and finance and stuff. An enrolled agent is 100% focused on tax, and they are specially trained in like all taxes, and they can represent you before the IRS too, just like a CPA could, but they know more about taxes than a CPA does. So that's it.
And I know you are a QuickBooks expert, but is there, QuickBooks can be expensive. What do you recommend as far as accounting type software, or if you're just starting out and you're not to that point yet? I mean, is a spreadsheet sufficient to get things rolling, or how does that work? What do you recommend?
People don't want to use QuickBooks. I recommend Wave. It's a free accounting app, or at least it was earlier this year. I mean, they're always changing prices and stuff, but it's not as robust as QuickBooks. Like accountants don't use it, but Wave is really good because as far as I know, I think it's still free. Business owners can actually link their bank accounts to it just like they would QuickBooks, and it pulls in all your transactions for you, so you don't have to manually track everything. You just put it over into the category where you think it goes. So Wave is a really good one.
I can say that Wave, there is a free option, and then there's a pay per use and monthly. So
okay, do you know the free option? Is that good? Or
it says I don't know it personally. I'm just looking it up. Yeah. So accounting and invoicing, $0, no setup fees, no hidden charges, no monthly fee. So I think for the very basic, it may be better than just a spreadsheet. So
yeah, so like you could do like a combination of Wave and Square, or Wave and PayPal, or something like that. Or Wave could probably process your payments for that fee. Like I process all of our payments through QuickBooks, and I do all of our accounting in QuickBooks online. QuickBooks Desktop is being phased out, and it will go away at some point. So don't invest in a new QuickBooks Desktop. If you're already on desktop, you could stay there, but like if you're just thinking about getting software, don't get desktop, get something online, because desktop's gonna go, it's being phased out. But I do like Wave, it's good. It just doesn't have all the crazy reports that me and Ashley like to look at.
Yeah. So Maggie, before we wrap up, is there one thing that, without like tattletelling on your clients, is there one thing that you see most often that small business owners miss?
Actually, it's all those little things that they pay out of their personal accounts, I think. Ashley, what do you think? Like it's the mileage and the cell phone and the internet and the home office. Those are huge. Like the mileage is a pretty huge deduction for most people.
And one of the biggest things is when they don't have a separate business account, you can miss so many business expenses, because we're going in at the end of the month or the beginning of the next month to do the bookkeeping reconciliations, and they have to think back to the beginning of the month. What was that expense? Where did that money come from? Where did it go? So then they end up missing out on a lot of the expenses that they could be taking.
I would say 100% of the time, our clients have, find more expenses once we start tracking it, or once they start tracking it automatically. Like and Wave is free. So if you just start using Wave, you're going to save money on taxes because you're going to find more expenses unless you're already tracking everything, through a separate bank account. But get a separate bank account and get some software. And they're both free. So
That just made me think of something else. Sorry. Are there different, there's an app for everything. Are there different apps that connect to your bookkeeping software so that if you're, say you are on the road and you can just enter in your mileage and then it connects with the software and things that you know?
Quick actually knows more about apps than I do.
QuickBooks does have an app. You can track mileage, you can upload receipts and invoices and things like that to help keep track of everything.
Well, does anybody have any other questions or comments? All right, well, I will, once Maggie sends me all the information, I will send it out to all of you all. And thank you so much for spending your Friday morning with us. And we look forward to, we're in the process now of planning all the next Think Local training. So if you have ideas, feel free to email me or Chrissy, or just let us know what it is that you need, because we work in businesses, but we're not business owners, so it's a different kind of thing. So we may not know exactly what it is that you all want and need. So just let us know.
I will give a plug. Sorry, I will give a plug for the Tuesday. We have our Canva 102 training. So if you guys want to learn more about Canva and how to do that for the marketing side, we do have that coming up. We just ask that everybody have a Canva account first off, because that's important, and then have a brand kit set up within that. And then I'm going to be showing you how to make some postings and how to use Canva more on your marketing. So that is another training just next week that's coming up if you wanted to participate in it. If not, we'll record it and post it on our Think Local website.
Yeah, and this recording will be available there as well. So
Andy, we'll look up some non-taxable employee benefits for you too.
Thank you.
all right.
So many rules, we'll have to look through them.
Yeah. All right, well, thank you all so much for being here, and enjoy the rest of your Friday afternoon.
Yeah, it's Friday.
Hi guys, thanks so much.
Bye.
Good seeing everybody.